Guys, thanks for joining my market report. This is Mike, and we like to get these reports out to you in the mornings, to kind of about midday, East Coast time, to get you an idea of what the markets look like on mortgage rates. We kind of like to get into what the trend is, what's impacting the mortgage rates on a daily basis, and kind of get that out to you so that way you can decide for yourself if you're in the market to refinance or purchase where rates are going. So that way you can make better decisions for yourself. And so if you got questions about mortgage rates, got mortgage programs, or the process, please feel free to reach out. We're here to assist you in any way possible. I am a loan officer. I do work with the national lender, so we're here for your assistance. In the meantime, why don't we jump right into this and look at the economic report today? We do got a lot of data coming in today. We'll start with the Philly Fed Index. This is actually the manufacturing data out in the Philadelphia region. We had a 30.7, which was an extremely very good number for that area. And the forecast has gone for a slight downturn to 28, and it dropped much more rapidly down to 21.9. So obviously that's a little alarming that it dropped that much. However, 21.9 still is a pretty good number. Anything above zero is considered expansion or growing optimism. Uh, Also on the docket, we got this jobless claims number. Now, last week's report came in at 373,000. However, that did get revised a little bit higher to 386,000. Our forecast for this week is at 360,000, and it came in at 300, well, right at forecast, 360,000. So, good news right there. However, of course, look at last week's, so it was up 13,000. If you just want to glance at continuing claims, we can see that it is dropping, which is obviously good news. That we're seeing people coming off the unemployment, which is good news, and hopefully taking more of those jobs, as we had over 9 million job openings nationwide. So hopefully we can get some more of those, get more people into the job market. We're also getting towards the end here. We got another manufacturing data out of the New York region this time. This is the New York Fed, or Empire State Index. The previous report back in June was at 17.4. How forecasts gone for a slight improvement to 18, and it jumped up much more rapidly. This is actually a all-time high for this at 43 on this. So you could just imagine doubling that of the Philly Fed, how much more uh, activity is going in the New York region. Lastly, we got the industrial production for the month of June. We had a 0.8% increase, revised down to 0.7 back in May. Forecast was kind of for 0.6%, and it came in at 0.4%, so a little below expectations or forecasts. Let's jump ahead to the headline news, and stocks are down. Stocks are taking its cue mostly from, we're getting some corporate earnings reports, but we're not getting any big hits on that today. It's taken most of its cue from the Fed Chair Powell's testimony before Senate committee. It's the second day. Yesterday he met with the House committee, and today he's meeting with the banking committee with the Senate today. And again, he's just kind of keeping to the same speech and message that he's been saying all along, basically that yes, the inflation has spiked. It is transitory. They think once the transitory period ends, he didn't necessarily say a time frame on it, but most people are kind of projecting by end of summer, heading into fall, that we should be through that. A lot of it had to do with the unemployment benefits, kids going back to school, people able to go back to work. So they feel that more people go back to work. Once they get back to work, they'll be able, manufacturing will be able to fulfill more of the back orders that are out there. So we have a big backlog on a lot of things. And once those get caught up, the prices will start coming down a bit again as a result of those. So as the jobs are not near where they want, he's basically stated that we have a long ways to go. He wants to keep the purchases before tapering, the mortgage-backed securities and the treasuries, which equals about 120 billion a month. So this is what's artificially keeping mortgage rates lower. Once they do start that tapering, you will see less and less demand for it. Therefore, you'll see the mortgage-backed securities rise, which will therefore mortgage rates will increase as a result of that. You might see these in between that once the news come out that they begin the tapering. Wall Street will also go ahead and begin their taper tantrum. So he's trying to give forewarning much in advance to try to avoid a taper tantrum. So we'll have to kind of wait and see. But the last time they announced that they're going to pull back, they had a taper tantrum, and then we saw some big spikes in mortgage rates at those periods. So be cautious ahead. That probably won't happen until earliest probably in November when they start doing any tapering. So again, it could be this year or it could be starting next year. The, it's undetermined as to exactly when they're going to begin that. Let's jump ahead, see how mortgage rates are doing today. Mortgage rates are doing all right. You know, we did have a little negativity. Part of that was some hawkish comments that came out of the central bank in England, Bank of England. However, it did subside a little bit as we've kind of progressed a little bit further. It's gotten a little bit better, so we're up about 8 basis points. We end up closing up 25 basis points. We might be coming close to a price improvement, but right now I'm going to say mortgage rates should be fairly unchanged, but we may see some improvement if this continues, this little movement here. If the markets don't, if the markets keep moving like this, we could see some improvement in our pricing today. So that would be obviously good news for those who are in the market. Yields are down. Finally broke below that level here yesterday and then continued. We're approaching the 130 mark, and right now we're just under 1.32 on the 10-year Treasury right now. All right, so that's pretty much the wrap for today. I hope this helps you guys out. If you guys got questions, we're here to assist. If you guys like the video, please hit that smash that like button. It certainly helps out the channel. We appreciate your views and any comments you guys might have. You guys have a great rest of your day. Thanks so much for watching, and I'll look forward to see you guys in tomorrow's video. Bye-bye.